The silver funds have added over 100 million ounces of silver since March. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And in today's show, as you can likely already see, we're going to talk about how the silver funds have added over 100 million ounces of silver since March. And as we will also dig into, this is in a market that is reported to be in a deficit by the Silver Institute, who also had an update that came out yesterday. So we'll dig into all of that and a bit more. But let's first take a look at the gold and silver prices. We can see silver down again today, only 15 cents today. And if we take a look back at the 1 month chart, we can see certainly since election day, there we were up at 32.70. So over $2 lower since then. Similar pattern in gold where we're below 2,600 in the December futures. And again, really this sell-off that we're seeing now began on election night. There we see in gold about 27.50. So let's call that $165 lower that we are now, which I'm not sure that I agree with the market's reaction, especially the idea that the dollar is going to be stronger. Perhaps the dollar will be stronger against some of the other currencies, as we've seen in the dollar index. The dollar in and of itself is not going to be stronger. If there's anyone who thinks that the price of things that you are buying is actually going to be cheaper in a couple of years, I'm not sure that that's going to happen. I think there's certainly a good chance the gold and silver prices. So if you're measuring a different way, I mean, I guess that's what it all comes down to. How are you measuring whether the dollar is stronger? Although certainly, as we will touch on, and you can see down here, dollar index rally continues over 106 after today's rally in the dollar index. Good thing just to keep in mind, being clear when people say the dollar is rallying or declining, measured in what makes a big difference. So, but as I mentioned, that really wanted to dig into here, we're in a market that's reported. Now, this depends on whether you count the ETFs or not. If you do not, the silver market reported in a deficit for 3 years. If you include the ETFs, that goes up to 5 years. And Silver Institute had projected, including the ETFs, a deficit of 265 million ounces for 2024. That's a forecast that came out back in April. And what's interesting is in the time since that forecast, roughly around when it was coming out is when you started to see this. But here, blue line is the amount of silver. This includes COMEX and all these silver funds and ETFs. And we can see back here in March of 2024, we were around 1.283 billion ounces, and now that's up to 1.386 billion ounces. So just over 100 million ounces that, in many ways, you saw this start when the gold rally really began taking off, even before we saw people really get more confident that the Fed rate cuts were coming. As you saw that, certainly that was when a lot of the Western investors piled in. And in either case, you can see that's 100 million added. And if you look at the original Silver Institute set of numbers, they had 50 million going in this year. So we're obviously already ahead of that pace. And if you take a look further back here, just to put that in context, here we are in, that's what this point here is what I had marked there. So that's where we have 1283 coming in from this point in March and has gone up quite a bit. As you can see, still well below where we were at Silver Squeeze. This was the massive over 100 million ounces that was reportedly added into the trust during that weekend, which I'll leave comments on that aside today. Seems a little hard to imagine. Again, if you take a look further back, you can see that the general amount of silver has been adding. We had that spike here, although maybe not all that far off the trajectory of how much silver has been going in. Keep in mind, this is still with relatively low demand. Yes, it has started going into the ETFs and the funds, but a lot of retail selling and certainly not in an environment where we've had a mania for silver yet. And as I mentioned, this is especially what's happened in the let's take a look back at the silver chart a little further back from here is the Fed meeting on the 18th there. So silver down 30 cents since then. When you look at what's happened to the dollar since that September 18th date, where we were 100.29, so just about 6% higher in the dollar index, which obviously often has an inverse correlation with gold and silver flat, gold probably similar. All right, let's not be lazy. We'll take an exact look at gold. Here we are back on the 18th here. So gold down a little bit, 25.90. So, or no, we got about 2,600, 25.90, although it was down to 25.61 on the open. So both the gold and silver price slightly lower, yet that's happened when we've seen a 6% rally in the dollar, which makes you wonder if they can stay flat while the dollar is rallying like that. What happens if we do ultimately see that move reversed, which I'm guessing will happen. I know there's the school of thought out there that the Fed might be done cutting now, largely because of the Trump administration, which raises a whole host of other questions about the whole Fed independence, and if, depending on who the president is, changes Fed policy. I wonder how independent that is. On one hand, if he is going to do tariffs, cut taxes, and drastically cut government spending, which we will also touch on before we wrap up today, then yeah, there would be differences perhaps in how you'd approach monetary policy, but still the idea that, and this is perhaps unconfirmed, but you do believe that the Fed might change what it was going to do based on Trump coming in, well, I guess it's not entirely independent. Although for those who have studied some of these things farther back, obviously that does not come as any new surprise. But either case, in a silver market where we have the deficit, we've had 100 million ounces added. So now, again, it was a little higher to start the year. So the amount added since the beginning of the year is slightly less than 100 million ounces. Still, you get the idea. If the deficit numbers are accurate as reported, and now you have 100 million more that had to be accounted for somewhere. Well, we've talked a lot about the supply and demand. We'll keep things moving today, but I think you get the point there. And then, as I mentioned, Silver Institute had a new report out yesterday mentioning global industrial demand on track for a new record high in 2024. And they expect that to come in at 1.21 billion ounces. Mine supply only going to rise by 1%. Global silver demand is expected to rise 1% year over year. Industrial demand forecast to rise 7% and surpass 700 million ounces. And you can take a look down here. These are their updated numbers. And what was a forecast 265 million ounce deficit when accounting for the exchange traded products is now up to 282 million ounces. So either case, if you go to the Silver Institute, you can find their latest set of numbers. And I will have more comments on this in the days and weeks ahead, but wanted to make sure you knew that was out there, and that also, in the face of the inflows into the ETFs, Silver Institute forecasting record demand. Here is a paper that I've mentioned a while back, but in case you did not see that, this was done by Oxford Economics on behalf of Silver Institute, and they were giving their forecast of industrial demand over the next 10 years. And the key one here, over between 2023 and 33, we forecast the global output of end users of industrial silver will increase by 46% in real terms. Rapid growth in the output of electrical and electronics applications industry, which is, there's a comma perhaps somewhere out of place there, but maybe not, but we'll let that slide for now, which is forecast to grow 55% for electrical and electronics applications. And as you can see here are some numbers from Ember. Currently on track. This was written on September, so 2 months ago, and we are currently on track for 593 gigawatts of annual solar capacity additions versus 459 last year. And if we take a look at Solar Institute, fortunately, in this one, they do not break out the solar demand. So you're not going to find that in this one. That would be included in industrial. And here you can see they're forecasting this year, forecasting 700, saying last year we were at a 655 level. So that is how you get the 7% increase. And in terms of just another note, we talked about this yesterday with Dave Kranzler on the show, but in case you did not see this, this was the COT report from last week, which did not include the decline that we saw following the election. That will be on this week's report, which interesting to see if we will see more short covering. Here you can see short covering by the banks as they reduce their short position by 15,766 contracts, letting go of a few longs. Obviously, basically a mirror opposite picture for the managed money. Similar position here in silver, banks letting go of 4430 contracts, letting go of 882 longs, 4430 short contracts. And the part I wanted to mention here is that, as you can see, particularly in the gold chart, here's the swap dealer net position. So it reached a record high recently, has been a bit choppy over the past couple of weeks. There you can see that last bar up there is the reduction that came out in the last week. And first of all, it's a little bit premature to say, but if the banks were to start covering at some of these levels or continue covering or cover to a larger degree, continue bringing those short positions in, does that mean we have reached the bottom? No, not necessarily, although I'll mention this was in yesterday's Substack column. Link to that in the description field below if you'd like to take a look, where we're writing about this stuff every day now. But what I mentioned here is that but if there is indeed further short covering reported in this week's report, it would lend more credence to the possibility that we may be seeing a new floor set, which is not to say that we are currently at that floor just yet, but perhaps more appropriately that the probability of seeing a gold sell-off take us back to the $2,000 area is getting lower. So that's how I would interpret what we are seeing there. I did run that by Vince, and I like to think anytime I'm not sure about something, either phrase it as such or check with someone that I trust. So he felt that was spot on. And I know we talk about this short position a lot, but we'll try to keep an eye on what you can actually make or take away from that. So there you go on the COT report. One thing to keep in mind in terms of the silver demand, obviously Trump seems to be less of a fan of the green agenda. And where that comes in is that I've wondered what happens to silver if we do have a recession, if industry is down. Well, obviously you would have less demand for copper. If copper supply goes down, silver supply goes down. So it's a very complex silver and demand picture. But let's say that you had the recession. I've felt that, well, unless you see the government standing aside and not doing any fiscal stimulus, if you do see that happening, where would they target? Certainly, if the Inflation Reduction Act is any sort of template, then green energy would be one of the recipients, which I don't know if something that you can guarantee or count on yet. Thinking steps ahead of what might actually happen. Obviously, not if Trump is elected anymore. Now that he has been elected, certainly the chance that that could change U.S. policy. Is he going to be able to change the global policy? I'm not sure. I also remember that there's an article out there that I don't have it pulled up right now, but Elon Musk talked about how our energy issues could be solved with a giant solar grid. He felt that it's able to be built. And as you'll see in just a moment, apparently his role in the administration is becoming more official now. So anyway, my takeaway is that, yes, it could have an impact. We'll also see what impact Musk and some of his ideas have, although there is also the rest of the world, so we can keep that in mind as well. And there is the dollar index, which we already saw, also affected by CPI, which came out this morning, largely in line with expectations. So no big moves in particular coming out of there, although I thought here was an interesting quote from another CNBC article about that. Progress in the fight to tame pandemic era inflation, we're still on that one, appears to have stalled out despite lower prices at the gas pump and a moderation in other consumer staples. Meanwhile, economists think policies such as import tariffs, if enacted, exacerbate the inflation rate, which hasn't yet declined to policymakers' long-term target. I would agree with that, and really raises some interesting points because while the Fed felt it was appropriate to go 0 and then 50 basis points and then 25, and we'll hear a comment on why they did that in just a moment. I saw on Twitter, I think it was Charlie Bolello who had pointed out that core CPI, we're still over 3.3%. And I believe today's reading would now make that 42 consecutive meetings. And what I don't get is that if the Fed, and Powell talked about this at the last press conference, mentioning again the dual mandate, stable prices and maximum employment. He says the economy is fine, and yet after going 0 basis points in July, then goes 50 basis points, while he says then, as well as last week, that the economy is fine, while core CPI is still over 3.3% for over 40 months, which just seems strange in the sense that if you have two mandates, one of them you're saying is fine, and the other one, which people are still paying the cost of, even as this comes down, prices are not coming down. The rate of increase in pricing is slowing somewhat. So what happened between July and September that it was that urgent that if the economy is still fine, that focus on the mandate that in his own words, he says is going well at the expense of the one that is maybe not raging as ferociously as it once was, but still not down to that 2%, at least on this metric. But let's hear what he had to say.
This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment.
So just in the way it's phrased there, it seems like even in his mind, it's not 100% what we've done already, inflation done. It's certainly suggesting that it's less than certain. And here's the other quote from
As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly.
So there you go, is the key part. Stop it, Jerome. No.
In order to best promote maximum employment and price stability.
So again, he mentions if the economy is not strong, inflation is not sustainably moving back to 2%, we can dial back policy restraint. Seems like it, again, very less than an outright certainty that inflation has been beaten. And if the economy is still strong, why choose that one mandate over the other? Was what I did not. Well, I hear what he's saying. I disagree. He's Fed chairman. I'm not. Although in terms of probabilities for the next meeting, it looks like we are still leaning 4 out of 5 chance at another quarter point cut. And by the time that happens, we'll know a little more. A few last stories here as we wrap up. This I saw yesterday was rather shocking. Elon Musk joined Trump-Zelensky call amid concerns for the future of Ukraine war. I don't know if that's normal that someone like Elon Musk would be involved in that call, and perhaps more so if he's officially a part of the administration, which seems to have happened, as this came out either, that looks like yesterday. So Trump names Elon Musk, Vivek Ramaswamy, to lead new government efficiency department. So here, I'm pleased to announce that the great Elon Musk, working in conjunction with the American patriot Vivek Ramaswamy, will lead the Department of Government Efficiency, which comes out to Doge, ironically enough. So apparently that's been made official. We'll see what comes from that. But certainly could change the path of how the US government approaches this situation that it's in, where you can guess close enough what some of the parts of the final ending look like. Some we don't know exactly the way they will be arranged, but this will be one that certainly we will keep an eye on. And anyway, as we wrap up, just did want to thank Fortuna Silver, who helped to bring us today's show. And we did do a call last week with Jorge Ganoza after they had record earnings that came out on Thursday, although there was one note that I thought got a little bit less attention, but perhaps just as relevant. And we'll play this little 30-second clip of Jorge explaining it here.
We're losing production at San Jose this year, which is our highest cost mine. And we're completing a very heavy capital project in Argentina, which is a decade, a project that serves the mine for a decade. And we're executing it this year. So if I adjust for those two projects, which are not in the portfolio in 2025, we're seeing at least 150, close to $200 perhaps, coming out of my ASIC. We're losing production at San Jose.
And there you have it. So again, gold price, even with this week's decline, still higher than what they were selling their gold at in the third quarter. And because of that Lindero leach pad expansion project coming to a completion and the other factors he mentioned in there, looking at an all-in sustaining cost, $150 to $200 lower next year. Again, you can find out more about Fortuna Mining at fortunamining.com, or you can just click on the video coming your way now, where we had a call with Jorge and our dear friend Dave Franzler just last week to go over those earnings and give you more information about what's going on there. So I hope you're having a great day out there. Appreciate you spending part of it here. And to find out more about how the last quarter went for Fortuna Mining, well, just click on the video that's coming your way now.